Welcome to Everything Financial Radio. This is the Legacy Radio Network. I'm your host, Dennis Tubbergen. I am here every week at this time. If you're an old listener, welcome back. If you're a new listener, stay tuned. We have a terrific show for you. Dr. Chris Martenson, the author of The Crash Course, a terrific book and must-reading if you're concerned about the economy and what it might mean for you and your money, will be joining us. Dr. Martenson has an extensive travel schedule, so we are very, very pleased to have him on the program. Also, this past week, the CEO of a Fortune 500 company got in a fight with a CNN commentator. What were they fighting about? Obamacare. You won't believe the story. I watched the interview, and I also read about the interview. You won't want to miss this. Also, Bank of America, one of their economists said that a bond crash ahead is likely because the economy will probably be transitioning from deflation to normal growth and rates. I'm going to tell you why I think he couldn't be more wrong. And economist John Williams of shadowstats.com reported that when you look at the real unemployment rate, when you include people that are working part-time that want to work full-time, and when you include people that have quit looking for a job because they're discouraged, the real unemployment rate is closer to 23%. Those are 1931 levels. And finally, we'll look at the damage that the Federal Reserve has done to the U.S. dollar in the last 3 years. I'm going to reference a blog I wrote back in 2009. At that time, an ounce of gold was $980. Today it's about $1,650. We'll look at what the Fed has done to the dollar and what has happened to your purchasing power. You know, we talk about the dynamics of this economy. Take someone that's retired today, trying to get some yield on their investments. That's difficult to do without taking a lot of risk. And at the same time, prices at the grocery store and the gas station and the doctor's office continue to go up. So it creates a real difficult situation for a lot of folks that are retired and planning to retire. We talk about where we are today at our new course that we're offering at the West Michigan University campus out on the East Beltline here in Grand Rapids. You can get information on the course at newretirementrules.com. Newretirementrules.com is the website. We talk about in the class that where we are today may be entirely predictable. We look at 5 other times historically when policymakers and politicians have resorted to printing money when debt levels were very high, and we show you what happened in each of those circumstances. So it's certainly something that if you're planning for retirement or are already retired and you want a different perspective, it's something that you should go check out. Again, the website is newretirementrules.com, newretirementrules.com. Also, if you'd like to get a report, a brand new report for 2013, the report is titled 2013, The Retirement Rules Have Changed. It's a report telling you our perspective on the economy and has you consider some strategies for your particular situation. You can get that report for free. You just need to go to mybest2013.com. Those are the words mybest and the numbers 2013. That's mybest2013.com. We'll be glad to send you the report free of charge. I'm pleased to have back on the program with me Dr. Chris Martenson. Chris is the author of The Crash Course. If you've not yet picked up that book and read it, I would consider it to be must-reading in today's economic environment. Chris, welcome back to the program.
Thank you, Dennis. It's a pleasure to be back.
Chris, in your book, The Crash Course, you talk about the coming storm, which is actually the title of the first chapter, and you talk about the 3 E's and how there are several trends that are all converging really for the first time in history. Can you provide the listeners an overview of these 3 E's and the coming storm?
Certainly. I'd be happy to. The way I look at the world is that we can no longer really just look at any one spot. Okay, so we have economists. They just look at the economy. They're pulling monetary levers. They're attempting fiscal policy. I think that's an important E to look at, the economy, but we also have to now look at energy as a large area and the environment as another large area. And the environment for me is a place where we're taking resources out of and we're putting waste streams back into. And the summary of the 3 E's is that we're starting to hit real limits in both energy and the environment. And unfortunately, our economy is actually only tuned to do one thing, and that's grow. And not just grow, but it has to grow exponentially in order to be happy. And so the coming storm simply says, due to real limits that we can now point to and see, whether it's in water, in soil, in our ability to produce exponentially more food every year or exponentially more energy, all of those have been tipping over and going flat for the past few years. And the summary of the 3 E's says, get ready, because when our economy, when our financial system cannot grow in the way it wants to, it behaves very badly. And listeners and readers really ought to be taking steps to protect themselves from this storm.
Chris, there's been news stories out, speaking of the energy topic, that the United States is poised to become the next Middle East, that we have vast stores of natural gas, and the fracking technology is going to allow us to be energy independent for many years to come. What's your take on that, and is that reality?
Well, unfortunately, in this story, there's a whole lot of propaganda and misstatements and mischaracterizations in that story. It's not appropriate to lump all energy into one category and say the United States will be energy independent, which is actually true. If you lumped coal, natural gas, oil, wind, hydro all into one bucket and said, can the United States produce enough, however you want to measure that, BTUs, kilowatt hours, however you want to sort of lump it all into one place, you could say, yeah, the United States will basically produce as many BTUs as it's going to consume. That's not an appropriate way to look at energy, though, because they're not equivalent. I can't take electricity and put it into my fuel tank. What we really have to understand is that the United States is, as of today, a big importer of liquid petroleum so that we can run our society and our economy, and we will remain an importer of liquid petroleum for as far as the eye can see under even the most optimistic of circumstances. And so really there's been this push to sort of muddy the waters and claim the United States is going to become an energy producer, which is true. However, we're not producing the kinds of energy that we really need. We're producing a lot of natural gas. However, we still don't have a way to use natural gas in our transportation technologies. And so to me, it's kind of like if somebody came to my house and said, hey, how many calories do you have in your house? I want to know how long you could eat in an emergency. And I say, well, I've got ice cream in the fridge and I have batteries in a drawer. Let me just add those two together and put them into a calorie equivalent. It wouldn't be appropriate. And so I'm really confused by why at this stage our main energy reporting body, the EIA in the United States, and why so many analysts have decided to confuse the issue by suddenly lumping all energy into one form and saying it's the same thing, when it's really not. It's really doing a disservice, because there is still a global situation where, for whatever sets of reasons, even though the United States has increased its oil production a bit, the world has not been able to produce any more of the conventional crude and condensate than it has in the past 6 years. And this is despite a full doubling of the spend in production and exploration budgets of the oil majors. So going from $300 billion to $600 billion a year worldwide spend, and we're still producing the same amount of oil. That's the real part of the story that needs to be understood and told.
Well, if you're just joining us, we're chatting with Dr. Chris Martenson, who is the author of The Crash Course, and we're happy to have him back on the program. Chris, let me maybe just expand on that a little bit, because worldwide the population is growing. There is a finite amount of energy, so and we'll talk about the economy in the next segment, but does this mean that energy prices are inevitably going to have to go up from here, perhaps significantly? What's the outlook for energy prices?
Well, the chief form of energy I'm concerned with at this stage would be petroleum, oil. Yes, that's going to go up in price from here, because if you just take a gander over at what's happening in China recently, big news. They surpassed the United States in terms of auto production and consumption. They're buying more cars. It's a really big change. The whole developed world is kind of at a standstill with the amount of oil it's using, but the developing world, boy, are they coming on like gangbusters. And of course they are. Driving cars is a great thing to be able to do. And when we look at the trends that are in play right now, if India and China continue to increase their petroleum imports at the same rate they have for the past 10 years, by 2030 they will be importing 100% of all the oil that's available for export in the world. And obviously that can't happen. Something is going to happen first, and what will happen is prices will have to rise to level that out. Now, the real question is, if prices are going to go up or down, we have to ask who's willing to pay more for a barrel of oil, China or the United States? And the answer has to be the developing world is willing to pay more because they get so much more utility out of a barrel of oil than we do. And you can think about this. If you have the guy trying to get to market, he's got a little scooter, he's got 6 ducks. He might be willing to pay the equivalent of $400, $500, $600 a barrel for oil, where in the United States we would not be willing to pay that much if we're just, all we have to do is maybe take a few less trips to the store, maybe drop the soccer practice that's an hour away. So the willingness to pay thing, every analysis I've looked at suggests that the developing world is willing to pay quite a lot, and they would be happy to pay levels much higher than we are right now. And again, if China and India just continue on their current path, they're going to be consuming 100% of all available exportable oil in just the next 17 years. And so that's a trend that's in play. It's going to have to change somehow.
Chris, we have about 30 seconds left in this segment, which would be just enough time for you to let the listeners know how they could learn more about your work.
A couple of ways. One is my site is called peakprosperity.com, and we have a lot of just wonderful articles and materials there for people who are interested in looking at the story this way. And I have an upcoming live seminar, a weekend seminar, March 13th, 14th, 15th at Row, and you can find more about that at my website as well. So this is a very rich website, large community of people, and we talk about all 3 E's, and most importantly, what we can do individually and as community members in the face of what we see coming.
And we will be continuing our conversation with Dr. Chris Martenson when Everything Financial Radio returns here on the Legacy Radio Network. Stay with us.